Hey, what's going on, guys? This is Tosh from Stack Trading here to go over one of our standout trades for the day. Now, before we get things started, I'm going to go over one of the stocks that I feel was our best trade of the day, but I also want to remind you to be sure to subscribe to the channel, like the video, and turn on that notifications button so you can be alerted of when we post our videos as well as other educational content. So, WKHS, how did we play it? And honestly, where does it go from here? Well, WKHS and pretty much the overall market, whether it was the SPYs, the Qs, tech stocks, meme stocks, all of them were fairly choppy today, and that really served as the overall theme today. And honestly, that's been the overall theme for the past 2 or 3 days. Things have really calmed down. They're really starting to base out. You're seeing a lot of failed breakouts into new highs. You're seeing a lot of even failed breakdowns to new lows. And this is across the board. Like I said, whether you're dealing with meme stocks or even the S&P, right? The S&P, the past couple 2 or 3 days has hit an all-time high and has had big pullbacks since then. And then you'll see later in the day, recoveries start to happen. You're actually seeing that happen currently with the SPYs. So there's really a lot of choppy action going on. We have some big economic data coming out tomorrow, and I think once that data comes out, things will be a lot more clear of where the overall direction the market wants to take. So with that being said, let's get into how we play WKHS and also how to handle choppy markets. I think this is a very important um, area to cover when dealing with trading. One of the most frustrating positions to be in as a trader is an environment where the market is pretty choppy. And that's exactly what we had play out today. It's important to protect yourself, keep your stops tight, and take those opportunities when you see profit because of the risk of a potential pullback. So WKHS, how we played it this morning, we noticed there was a gap up happening right into, if you look here on the daily chart, right into yesterday's highs, which was around 1736. I have a line drawn out here. It was a prior resistance from 3 days ago, back on June 3rd, where you could see 1736 was a resistance. Obviously, yesterday it hit a high of 1736 and pulled back. And then you saw in pre-market 1736 how often it was getting rejected around this area. I know briefly here around 4:30 it did break out, but then it started to pull back, and then right before the open it traded right back down below that level. So coming into the morning, I knew that if WKHS wanted to break out, it had to hold 1736. Initially out of the gates, WKHS sold down as low as 1670, 1672. But then, this is the 5-minute chart. But then as the market started to settle a little bit, WKHS started to settle a bit, you started to see price action reverse. Once this candlestick went green, traded up to 1740. I took my call options, got long, and immediately it started pushing my direction up to 1760, 1780, 18 bucks. And at the same time all of this was playing out, I could see some of the other meme stocks starting to sell off. CLOV, AMC, right? GameStop was another one. A lot of the names that had a lot of momentum, Wendy's had a lot of momentum earlier, and even in the pre-market section was giving out a lot of the gains, and that's something that's very important to look at. What is the overall, I guess you can call it industry now as a whole? How is that behaving? And AMC for us has been something that we've referenced as almost like an indice for the meme stock. I know it's technically not, but you'll really start to notice when AMC runs, other meme stocks runs. When it dumps, it really starts to dump. So once I started seeing that play out, I was like, okay, 18 bucks, started trading a little above 18 bucks. I think it actually traded as high as 1820. I took partial of my profit off here right before it hit that high from June 3rd, which was 1833, because I knew that was going to be a pretty strong resistance. So I decided to take off half my position, and I threw the rest of my stops at 18 bucks just to protect myself. It did trade as high as 1859, but as you can see here, it completely reversed. Completely reversed. Hit, stopped me out, 18 bucks. I took my profit. Remember, my initial entry was 1740. And then WKHS just flipped from here, just completely flopped. So much to the point where I actually took a short here on WKHS at $17.20. Once I started to see this play out, I saw a lot of the other meme stocks selling off. I knew, okay, let me go ahead and try to get a short, right? And then immediately as I started to get a move down to the lows, I immediately threw my stops at break even. That's something that's very, very important to do, especially with these stocks that have big moves. Throw your stops at break even as soon as possible, right? Whether that's on a new low or a new high, depending on which side of the fence you're on. I tend to throw my stops at break even. Why? Because if you look at stocks, look at the S&P, look at WKHS from this morning, right? The last thing that you would want is to be long WKHS at 1740, and the next thing you know, you're taking a loss down here at 1670, at 16 bucks, at 15 bucks, right? Because you are in such profitable territory, you need to protect yourself, right? One thing that we constantly preach in our trading room as we're trading is that it's okay to get stopped out break even. It's okay to get stopped out for a small profit, because if we have a flag formation or if we have a setup that we're looking for, we can always get back into the trade. You don't have to marry one trade. You can always get back into it, right? So that's exactly what happened at the open. I took partial of my profit and then trailed my stops at 18 bucks, right? Moved them up from break even up to 18 bucks. And then same with WKHS. I initially had my stops here around 1740. I shorted here at 1720, got them moved down to new lows, threw my stops at break even. And then what I did here is, as WKHS hit a new low, I fully expect this 950 candle to have follow through. That's a big sell-off candle into a new low, but considering this is a meme stock with high short squeeze, it could just completely reverse on me, right? We've seen scenarios like this play out plenty of times where it looks like the stock's going to sell off, especially with AMC, and then next thing you know, it completely reverses and hits a new high of day. So for me, what I did is I adjusted my stops to 1672, which was the low of day, therefore protecting some of my profits. So I initially took a short at 1720, adjusted my stops to break even, and then once we got the flush here, threw my stops to 1672, and I did get stopped out. I got stopped out here, but guess what? Remember what we always say, you can always get back into the trade. Now, granted, I didn't get back into this trade because I actually ended up shorting Wendy's, which ended up being a good trade for me. But there was an opportunity to take another short here. You got the push down, and if you see on my charts here, 1570 is a March support from a few days ago. So what I would have done, and we actually had a few of our traders take this trade. As soon as we got that flush, throw your stops at break even. And unfortunately, it didn't work out this time around. However, you protected yourself. You gave yourself the opportunity to make the money, and you adjusted your stops as soon as you get that push in your direction. That's pretty much the overall theme today, because the overall market was very, very choppy today. Meme stocks were choppy. It seemed like every single time there was a new high or a new low being hit on a lot of these stocks, you had pullbacks, right? There was no follow through. There was no new high, the next 5-minute candlestick follow through, right? It was a lot of hit a new low, bounce, or hit a new high and bounce. You could see WKHS was, whether it was to the high or the low, both happened, right? You hit a new high out off of the initial opening candlestick, yank. You hit a new low, bounce. New low, bounce. Even here recently, new low, bounce. And then also, if you look at a lot of the other meme stocks, look at GameStop. That was one of the stronger performers today. New high, pullback, new high, pullback, new high, pullback. It's a overall theme today. So one thing that we were preaching to our subscribers is, hey, this is a choppy environment. So what we highly recommend is to keep your stops very, very tight. Be quick to go be quick to go break even, and 3, scalp. Scalp. Don't look for the big home run trade where, GameStop rallies, 10%, 5% in one candlestick, or AMC rises 5% or 10%. Take that quick profit and get back in on a pullback or another bull flag, right? So overall, pretty choppy day. I actually ended up a little green, a little green. It's pretty much, we'll call it a break even. Pretty much break even for the day. But I'm pretty satisfied with that because the market was pretty choppy today. And I think tomorrow we'll have a lot more clarity. We have a lot of economic data coming out. So we'll have a real gauge of which direction the market wants to take us. So that's going to do it for us, guys. Make sure to like the video, subscribe to the channel, comment below. What'd you think of the market environment today? Did you get chopped up? Did you protect yourself? Did you make profit? Did you lose money? How'd you trade it? Which stocks did you trade? And how did it go for you? But anyway, guys, that's going to do it for us. We'll catch you tomorrow. Peace.